And we're back with another episode of the International Money Cafe podcast, where we talk finances, taxes, and life for those who are foreign born, those on work visas, as well as expats overseas. In today's episode, we're going to answer a question that we've seen come through in both our practices from different people around gifting. So the question that we see that we want to answer today is, do I have to pay taxes on gifts from overseas family? And so we want to talk about the gift taxes. We'll obviously talk about annual gift exclusion. We'll talk about who's a non-resident, all the way up to what's the requirement or what's the tax implication of receiving gifts from overseas families. So, Manasa, do you want to jump into it and just talk about what a gift tax is and how that applies in the IRS tax code?
Yes. So a gift is taxable, unfortunately, in the US. And there is what's called an annual exclusion, which basically means that a person can give you that money up to that amount, and you or them don't have to pay any taxes on that. So for 2025, the annual gift tax exclusion is $19,000, I think, right?
I think so, yeah.
Yeah. So that means that I can gift Jane $19,000, and Jane can also receive a gift from someone else for $19,000, and so on. But the gift tax burden, so to speak, is on me because I am the giftor. Now, I can also give a gift of $19,000 to somebody else. And so the way this works really is $19,000 annual exclusion per gifter, which means I can give $19,000 if I have that much money to 5 different people without having to report any of that on a gift tax return. But I may want to. And here's why: because there is also something called a lifetime gift tax exclusion. Now, a lifetime gift tax exclusion really is approximately around $13 million at this point, give or take a few million. Now, the gift tax exclusion is the lifetime gift tax exclusion is really what the $13 million, this is how much you can gift away tax-free in your lifetime. And the annual tax exclusion actually sort of chips away at your lifetime gift tax exclusion. So if I have that much money and I'm giving these gifts, then I may want to file a gift tax return to show that how this is chipping away at my lifetime gift tax exclusion, but I don't actually have to pay any gift tax. Does that make sense?
It does. And I think in a future episode, what we'll probably do is take this part of the conversation and expand it, because there's a way we can use this as far as estate planning. And I think you've really hit a good point on that, giving away money during your lifetime. So I think that's a good point. But back to the
Yes.
question on hand, the people who are asking about how much money can I receive from overseas family, what we've realized is they're talking about people who are not U.S. persons. And by U.S. persons, I mean somebody who is not a U.S. tax resident. So this is somebody who's not a U.S. citizen. They're not a green card holder. They're a citizen of another country. They're outside the U.S. and they want to give their family in the U.S. some money. Does that sound good?
Yep, perfect.
And actually, some of the examples that I'm thinking about, and maybe you've seen something different, is somebody will reach out to me and say, hey, Jane, I'm going to school. I need money. My parents are about to send me $100K for support. Do I need to report that? Another case that I've seen is where somebody would say, oh, we're about to buy a house and my grandparents have offered to send me the down payment. So those are the type of gifts or transfers that we're talking about. Have you seen anything different in your practice, Manas?
Yeah, no, I have seen quite a bit of that as well. And of course, I do get many clients who have been receiving a large sum of money from overseas, maybe from their family, and they are applying for the EB-5 visa. And we can again go into details of what that really is all about, but that does happen quite often these days because people are receiving this money and they are using that to apply for the EB-5, and that definitely is a reportable transaction, but we'll go to that again.
And considering, do you remember how much you need for the EB-5 visa? You need something like, I think, around $1 million because you need to
Yeah,
be able to invest it in the US. So,
yeah.
yeah, those are some of the kind of monies that we're talking about. When the question comes up, and here's the thing that sometimes people find crazy is, what we'll say to you is, if you receive money from overseas, because these people are not part of the US tax code, there's actually no taxation on this money. Of course, with a few caveats. So one, if it's less than a K and it's coming from an individual, you don't need to do anything, make a note of the money. There's no filing requirement. If it's over 100K, and this is where we have some caveats, then you need to report this money, I think on form 3520. I'll leave that to Manasa to confirm the form. But there's no tax implications. You're just being transparent and you're just reporting that you received this money. Anything else you want to add to that, Manasa?
You're right there. The 100K is the threshold, and that has not changed as far as we know. There are talks about that being pegged to inflation, but not that we have heard anything else about it. So that's a number that you have to remember. K is where you hit that threshold and you have to report that gift on the Form 3520 Part 4. Now, that 100K is in total. So if you are receiving $20,000 from one uncle overseas, another $20,000 from your grandmother overseas, that doesn't still add up to $100,000, then definitely you need to report that. There are also other rules about all of these people gifting you being related to each other. But I won't go into too many details on that, but that is the threshold to remember. Yes.
Okay. And there was actually a case, I think we wrote about it at
Yes.
one point, where somebody received, I think it was something like K, all very transparently. They did not report it. And then a couple of years later, they come around to buying a house, and the person helping them close says, oh, we see you got this K in your account. Where did the money come from? And of course, they're like, oh, mom and dad sent us this money. And the person goes, did you file your 3520? And because they had not filed, unfortunately, they were hit with some pretty nasty penalties. So
Yeah.
if you don't file, and again, you're not paying taxes on this, if you don't file these forms, you are likely going to be hit by a penalty. Again, all we keep saying is be transparent. But there's one more thing around this. So we've talked about gifts from an individual. What about if the gift is from a company or corporation, Manasa? What's the
Yeah.
tax or what's the reporting treatment on that?
Yes. So if you receive a gift directly from a foreign entity, it could be a foreign corporation or a foreign partnership, the threshold is much lower. It is around $15,000, I think,
I think it's
and
gone up a bit because of
bit.
inflation. Yeah, yeah.
Yes, yes. So it is
Mm-hmm.
pegged to inflation. So just think about it. Maybe between $15,000 to $16,000. Always go with the lower limit here, just to be on the safer side, and then check it out. So if you have any kind of connection to a foreign corporation or a foreign entity, and you're receiving a gift directly from that entity, and it is more than a $15,000 limit, then again, that is also a reportable transaction, and you do need to put it on Form 3520 Part 4. There's one thing, though, that you were talking about penalties earlier, Jane, that I would definitely want to talk about it really briefly. Recently, and this has been very, very recent, just kind of towards the end of 2024, like we were talking about, non-filing or even a late filing of Form 3520 used to automatically trigger these penalties, which were up to 25% of your gift, which it's pretty high. So it would automatically trigger these penalties, and the IRS would just send you a letter which you spent years and a lot of money trying to, abate that. Now, what happened towards the end of 2024 was that finally the IRS gave out guidance that if you were late filing this return, you could attach what is called a reasonable cause statement to that form. The IRS would actually read it and consider that reasonable cause for late filing before automatically slapping you with a penalty.
Whoa, that's amazing. So I think what we're saying
Yeah.
is
But
if you've
but but
received
but
money,
here's a big but. Yeah.
okay, you
Yeah,
say the
yeah. But,
but
but
first.
one
Yeah.
one quick thing though. Yes, yes, yes. It's still, the IRS still might still go ahead and penalize you for not filing that. So it's not guaranteed that you will not pay the penalty, but then you do have an opportunity here to get caught up by filing it, even if you're late, with a reasonable cost statement, if that's the only thing you haven't reported. So just saying. And always be super cautious about these things. But yeah, that came out late 2024. Yes. Sorry,
So that's
I
brilliant.
interrupted you.
No, that's okay. Because what I was thinking is every now and again, I was talking to somebody a few weeks ago and they said they received money, they did not report it, and they were curious what to do. So at least now, from what you're saying, there's an opportunity that they can actually report it. But I probably wouldn't just do it on my own. You want to be careful about how you do the reporting of the late filing. So that's actually is a good thing. And it's not every day we say IRS is being nice. So this is this is a good one. So the next question that comes up, once you talk about the tax filing, the requirements and all that stuff, and this is of course very dependent on your situation, on where the money is coming from, is how do you actually receive that money here, right? So your uncle in whatever country has decided they're going to give you this $500,000. You were here in the US. How do you get the money? Do you want to talk about the different ways of getting that money, Manasa?
Yes. So there are many different ways of getting this money. One is you can actually just get that money as a bank transfer into your US bank account. You can have that money transferred into your account overseas, and that could be a direct transfer of money from whoever's the giftor into your bank account in that country. And there are other forms of gifts, but we won't go into that right now. But these are the big two ways that people do get their gifts. One, direct transfer into a US bank account, and another one is a transfer into their foreign bank account. And we'll talk about what each one of those entails, right, Jane?
Yeah. So ideally, of course, ideally, what we say is the best thing is actually have the transfer happen outside the US. So have your uncle or your grandma or whoever transfer the money to your overseas account, and that way the transfer happens outside the US IRS system, right? That way it's clean. There's no question about did the money land in the US first and all that stuff. But we know that's not always the option. But the thing I do want to point out is once that money hits your overseas account, there's likely for that particular year going to be some more filing requirements. It now means you have overseas assets, so the FBA, and then what's the other form, Manasa?
The
The
FATCA
88, the
Form
FATCA
8938. Yes,
80,
yes.
80, 89, 38. So you may need to file those forms based on how much money you received. And again, you're being transparent. Not everybody may need to do this, but
Mm-hmm.
you may need to do them. I think that's probably the best way of doing it. So you have the money transferred to your overseas account. It's going to be there for a couple of days or however long it needs to be there. And then from there, you can do a bank transfer. You can do other systems we've seen is things like Wise and that type of thing to transfer it to your US account. Do you want to talk about, Manasa, if the money gets transferred to your US account? We know it's still okay, but
Because of situs issues, this may cause that gift to be looked at as if it was made within the US. And now, even though the giftor is a non US person, the gift itself might become taxable. And payment might be your responsibility because you were the receiver of that gift. And the gift tax is about 40%. And you do not have any exclusions for it. But I think that there is an exclusion. Is that $60,000 here that we're talking about, Jane?
yeah, I think it's the 60,000 estate tax exclusion that we have. So, and again, I think we'll probably want to address this more when we talk about the estate planning and how you can do some gifting ahead of
Yes.
time. So yeah,
Yes.
so I do
Yeah,
like
not
that.
to
We need to
conflate the
watch out
two.
for
Yeah.
that. Yeah, no,
Yeah.
that's
Yeah.
a good point. So ideally, the transfer happens overseas, and to your point, you could have the money come directly to you, but you just have to be careful. I'm sorry, IRS does not make these things easy for sure.
No,
Yeah.
no.
So, what about? Do you want to talk about? I think there's a couple of exceptions where you may not need to file the Form 3520. You want to talk about those two?
Yes.
Okay.
So
Okay.
surprisingly, there are exceptions to filing the Form 3520. The one big one is a qualified tuition, and the other big one, which may not be in the best of circumstances, but it is medical payments for a US person. Now, though, remember, even if this is for qualified tuition or qualified medical expenses, sometimes, or rather there could be some confusion there as to how to receive this money and who pays it. So it's always best to have the person giving you this money paid directly to the institution. So if you're in college or uni, have them paid directly to them. Or if you're in a hospital or you need your hospital bills settled, then it's usually better to just have them paid directly to that institution. It could get a little, well, yeah, there could be a lot of complexity here as to how that money gets paid, but that's something that you have to watch out for. Those exceptions apply to you, but there are exceptions. And if that happens, like we always say, consult experts.
I totally agree with you. Before you receive this kind of money, it's definitely worth having a conversation
Mm-hmm.
with somebody that's familiar with this. Because again, what we've talked about is there could be filing requirements or reporting requirements, but there's really no taxation. It's just a matter of reporting, making sure you're being transparent, because all the IRS is trying to do is make sure they're avoiding shady characters sending money overseas. You know what I mean? We're not doing money laundering is really what they're talking about.
Yeah.
So with that, we've addressed what happens if you receive gifts from non-U.S. persons who are living overseas to you in the U.S. Over the next couple of weeks, I think we'll keep talking about inheritances because we're seeing a lot of these kind of things. And with that, is there anything else you want to add to this, Manasa?
Well, I know we don't have much time left, but let me just briefly put it out there. If this gift that you're receiving from is a non US person at this time, but this non US person used to be a US person at some point in their lifetime, then you have to be sure that they are not what is called a covered expatriate. So if they are a covered expatriate, that there are a whole lot of other things that might happen to this gift. So just putting it out there for this one, and we link the other covered expatriate episode in our notes, but that's one thing that you have to remember. And what is a covered expatriate? Just remember this. If this person ever had a US presence, then you may want to look into how they exited the US and determine if they could be classified as a covered expatriate.
That's a really good point. I wasn't going to go there, but I'm glad you brought it up, because if it's a covered expatriate, the situation changes completely. You're going to be liable for gift taxes, estate taxes, all that kind of things. Yeah, so I think we'll leave it here and just say, as long as they're non-US persons, you are okay. You just want to make sure you're transparent and you file what's required. And with
Yes.
that, I think we'll bring it to an end. Anything else you want to add?
No, I think this was really good. I like that we did this case study. And yeah, we'll look forward to bringing our listeners more and more case studies. And if you are listening to this episode, thank you. Thank you very much for being here, which means really that you recognize how complex this topic is and you want to learn more and educate yourself. So we really appreciate you being here, listening to our podcast. And if you want more great content, please check out our website, theimcafe.com. We have lined up a lot of episodes now for you. And while you're there, there is a great download that you can also look at. So thanks for listening. Until next time, bye.
Bye.